Victor, we have Victor on the line here today, and Victor, I try to make sure that I can pronounce people's names, and when I saw your last name, I knew I was going to be in trouble, so I thought I'd have you say it to everybody on the crowd because I don't know if you know this, but I'm near Fargo, North Dakota, and us Midwesterners, we always struggle with everybody's last names. So
Yeah, it's Victor Cuevas.
Cuevas.
Yeah,
So, well, Victor, I really appreciate your time. And Victor has had 30 plus years in the mortgage industry,
correct.
development industry, syndication. I mean, it sounds like you've had quite the career. And you were telling me before we hit record that it's kind of given you a path to a level of freedom and a lifestyle that you can now really enjoy.
Oh, definitely. Yeah, I started in mortgage banking when I was 22 years old. Actually, that's when I bought my first house. And I started a mortgage company as a loan officer. And in a matter of a few years, I actually bought a mortgage company that was from a friend of mine that was already exiting out of the business. He was just a broker. He really wasn't much interested in doing more than just brokering loans. Where I got very interested in actually becoming a mortgage bank. A mortgage brokering, you're a middleman and you really don't have much control of your transactions. And in this industry, you have to have control to compete, to be able to acquire and do a lot more transactions, have a lot more control of the deals. So soon after I acquired the business, I started with two loan officers and then went up to 288 loan officers in 36 branches. And we moved that company from a mortgage broker to an actual mortgage bank. The difference is we're using our own funds, our own warehouse lines to close our transactions. Plus, we have a lot more control of the deal from the very beginning. So, like I said, we went from two agents to 288 agents plus the personnel, which was pretty good. We were funding approximately 125 million a month at one point out of those offices. And then in 2007, the financial crisis hit. So then what I had to do is I had to dismantle everything, start closing offices. And the last two offices, I gave them away to my managers. Then I just kept the corporate office, stayed low for a little while. And what I ended up doing, I started saying, well, let me get into just buying property and flipping property and do that because I've done that all along. I've properties come my way, and if the numbers work and there's enough meat on the bone, I'll go ahead and do a flip. I've done multiple flips from single family, 4 units, and then apartment buildings as well. So after the financial crisis, I said, okay, let me just get into acquiring because at that time, there was certain circumstances going on that allowed opportunities. And what I mean by this, instead of buying a single family and flipping it, apartment buildings, multi-units, since there wasn't much credit being issued at that time, it was more about talking to the owners and getting more of agreements of buying property in different ways. But because credit was scarce, it opened the opportunity to different ways of structuring deals with them. So I started buying 16 units, 20 units, 34 units, because that was what was available right at that time. And it was very easy for me to, more than anything, get really good terms from the sellers. They didn't want to deal with the property, so they just wanted something else. They wanted out of the property for one reason or another. I would come in and negotiate terms on the property, and that's what I started doing. But then people would always come back to me, "Hey, Victor, you're going to go back into mortgage banking because we had a very good operation, but as you know what happened." So the bug hit me again, and I started looking around, started putting the word out as to who was interested in buying and selling their mortgage company or mortgage bank. I didn't want to start from the beginning more. So I was looking for a mortgage bank. So I acquired another mortgage bank and I went back into that business, but I didn't structure this particular bank right now that we own by creating branches. We more than anything concentrated on the agents themselves and then their partners, the real estate partners, helping them generate more business through social media and marketing and so on and so forth. It's more cost effective. And we're doing about $150 million a month right now in fundings with less than 40 agents, where before I had 288 agents. So we're doing that. And then about 5 or 6 years ago, something got my attention, and that was crowdfunding, where I thought, hey, that's really good to be able to do that. In mortgage banking, the way we do it is we actually do the loan, use our warehouse lines, and then sell the loan to the secondary market. And crowdfunding also gave me an opportunity to fund a loan and bring in investors to fund the loan and service the loans instead of just selling them to secondary market. So I started with that idea, started with the crowdfunding with that in mind. But then the opportunities of actually buying commercial property with investors, I really like that idea as well. So that's what I started concentrating on. So that's what we've been doing. We've been buying multifamily units and also office buildings. Along the lines, something very interesting happened. The county of Los Angeles eased up the restrictions in certain areas where the metro system runs by. And what they're doing is they're trying to implement where more people can use the public metro system and not use the freeways because, the environment and so on and so forth. So they ease up on parking restrictions in certain corridors of the city where they allow you to buy a property and build on it and it's a lot more cost effective, a much bigger return than if I was to go buy an existing building. So I can give you an example if you want of what we're doing. Yeah.
And just before you do, I just wanted to point people to your website, griffincrowdcapital.com. And I'm going to make sure to have that link in the show notes, but you can follow along with what Victor is talking about and get some more information there. But yeah, go ahead, Victor. Give us an example of what you're talking about.
Well, again, because the city has designated certain areas where the city is promoting the use of the public transit system, are you there? Can you hear me?
Yep, I sure can.
So they've designated certain areas. You have to know how to use find these certain areas so that you can come in and acquire property there. So once we identify the area that we're looking at or has been assigned or designated, we go out and we start talking to homeowners to see if they want to sell their property. If they don't sell the property, then we ask to partner up with them. They put their property as investment, and then we put the money of construction and build, where there may be a single family or 2 units, and build 8 or 10 units in their property. I'll give you an example. So we went out, we acquired a $700,000 2-unit property on 10,000 square feet lot, and we are building 20 units in that property. And it's allowed by the city because we're only maybe a block away from the metro station or Metro Link station here in LA. So, that right there, 700,000, we're putting 20 units at approximately 1,000 square feet of units at $1.75. You're talking about $4.5 million in construction. But once it's all said and done, that property is valued at $9 million. Rents for a 2-bedroom in this area is $2,500 a month. Mm-hmm. So based on that, the values are up at around $9 million for that transaction. So like that, we have many. So we give the opportunities to homeowners to take their property from, like I said, a small 2-unit or 1 unit, and we do the rest for them, and we partner up and keep that for either we decide at the very beginning if we're going to turn around and sell it, or we're just going to keep it for rental income.
Yeah, that's an interesting concept. I haven't run into anybody that has talked to the homeowners and allowed them to essentially invest in the project with the equity in that in that property.
Right, right. It's really exciting because like a lot of homeowners think that that's it. This is my 2 units and I can't do much with it. But then when we come along, we show them there's a lot more options that they don't know. They don't know that the city's allowing this. They don't have the information or the resources to actually build. So we come in and partner up. So I like it because we have partners all over the city that now they have a property that is worth several $1,000,000 depending on where they're at. It's quite exciting. When I have a group of people that are constantly contacting homeowners directly, and I'm saying I'm mining for gold, but I'm getting diamonds because for us investors, we don't have to buy the property from the owner. We just partner up. We're still getting the same result at the end. Mm-hmm. And at the same time, we create something more for these homeowners that they didn't even think of.
Right. So do you feel like when you're talking to these homeowners, it takes a little education so they understand the concept?
Yeah, most definitely, because they're not aware. They might see a building go up down the street and are wondering how did they do that or what's going on. But we definitely have to educate them as to how it's going to work. What does it take from their part? Because sometimes these units are rented, and so we help them deal with that. But we do definitely have to educate them, which I like doing as well, where we show them from the very beginning, step by step, what's going to be the end result and how they're going to benefit from it. We also show them as to if we build and we sell, here's a return. If we build, refinance, get all our investment back, including the homeowners, and just keep for rental income, what is the end result there? And most of the time, that's what they go for. They go for the long-term rental income, which makes a lot of sense.
Right. I'm curious, Victor, you mentioned having your down in 2007 and talking about bouncing back. I mean, you now have another mortgage company. You have these projects going on. But before that, it sounds like you built quite a large business. What did you go through to get your mindset in this space to think that this is even possible? And I know this is a pretty vague question, but I think a lot of people kind of go through that. It's pretty astounding what you've accomplished here. And I know it's been over a 30-year career, but you're talking some very big numbers and some very big projects and some very large companies.
Naturally, right after the financial crisis and closing all those offices, it kind of like beats you down because, for a while there, you're like a lightning rod and then you're spending $10 to get two back. It wasn't making any sense. So once you go through the whole process of closing and that beats you up for a little while. I'll be honest with you. I was probably staring at the TV for a month, before I realized, hey, what am I doing? Let me just get to work and do something else. And the first thing I thought of, because I thought I was going to be done with the mortgage industry, was let me flip properties. And I thought about flipping single family residence. And believe me, it's harder to flip single family than it is apartment buildings. It's harder to do that than go to apartment buildings because it's easier for me to get financing. It's easier for me to find a really good deal, as opposed to single family residence. But yeah, you do go through a little phase, and you just have to pick yourself up and say, okay, what am I going to do? Do this again? Let's do this again, or do I do something else? I mean, I did try something else, which was like a commercial, and like I said, it was very easy for me to go into the commercial, find the properties because of knowing that there was not enough credit out there being issued for financing. That now I have to negotiate on terms alone. And going in with that mindset and thinking about that, I mean, I was able to pick up three buildings in probably like the first 45 days that I came back. And I kept on doing that. I just kept on buying apartment buildings because that's just what you have to do is if something changes in the market, you have to pivot. You have to adjust to what's going on. Let's just see what's going on and see where the opportunity is. If everybody's going right, see what's being left on the other side. So that's what I had to do. I just don't have a quit or a stop or a reverse button. I just go forward. It is what it is. This is what happened. Those offices are closed. I'm not going to do that again. Let me do it differently now. So when I decided to go back, and I didn't want to go back as a mortgage broker, I went out looking for a mortgage bank, and I found one. I found an older gentleman that was going to retire, and we made an agreement, and I took over the mortgage bank, and eventually I bought it off of him. I didn't want to waste 2 years, building the mortgage bank. I wanted something already with a license, something already established with lines of credit, approved lender, so I could just move from there. And I did it different because I didn't want to. Having 36 branches, you expose yourself to a lot of problems because you're not there all the time. So I decided I'm gonna invest more on my agents and help them be successful, help their partners generate more business, so we can in turn get the loans back and fund the loans ourselves.
Sure.
So I don't know if I answered your question, but yeah, I mean, I guess it's just taking action. Taking action is what it is. It's being persistent, consistent, and taking action. And some people just don't take action. And some people are not persistent, and some people are not consistent. You just have to have those three elements, I believe. It's just my belief, to actually get something done. So if you really want to do this is what you got to do. Just make your mind. What do you like? What do you want to do? And go for it.
Right. Oh, that's great advice. So it's just miraculous that I actually feel like I have to work on it, to be persistent, consistent. You said you don't even have a reverse. It sounds like it almost comes natural to you.
I've always liked business. It's what I thrive on. I like competing. I mean, friendly competition. I like that. I like all that. I like the thrill of the challenge and getting it done. That's what I've always done.
Sure. So curious now, you talk about, I find like a lot of people have it. It's a challenge to have rental properties in California. Some of the numbers in that just don't seem to work for them. You seem to found a way to get this accomplished. Part of it is getting those homeowners to, if they're not willing to sell, maybe they're willing to invest their property is the stake in that investment. What was the aha moment to make you realize that was a possibility or an option?
Well, yeah, that's a good question because, well, like I said, I have a couple of people that are constantly contacting homeowners, apartment building owners, or single family in that corridor. You have to know the corridor. You have to know where you're looking, because you can buy property in LA, but it's not one of the areas that has been assigned by the city or the county as being able to be built with less restrictions. So I have this group of people that these young people that are calling for me, talking to homeowners, offering to, buy their property from them, or, once they say no, some of my guys would say, hey, well, I get people that say no, they're not interested at all in selling. And I totally understand that. We're calling people from the blues, calling them, asking about selling their property. So then we said, okay, well, why don't you see if they're interested in at least partnering up? Because I know they don't know what's required or what's available to them. And then just throw that at them and see if that even interests them. And to my surprise, it interests a lot of people because they don't know that they can actually do this. Maybe they think that they don't have the funds to do this. They don't know where to start. They have no idea. Some of these people are this is their rental property that they have, and they've had it for a while, and it's just sitting there giving them $1,000, $1,500 a month rental income, and that's all they know. So, like, back to your other comment, yes, definitely there is some educating, because they really have no idea that they can do this. Some have a little bit of an idea because they just saw their neighbors' property be sold, and now there's an apartment building there, and also, they're starting to see the values go up in their area. For what reason, they don't understand, but it's just they believe it's the market. So we do tell them, this is what's going on. This is what the city is allowing. Mm-hmm. This is how you can benefit from this. This is how it will work. It's, the next question is, how much do I have to put into it? You don't put anything into it. You're putting your value of your property, the current market value of your property, into this venture. We figure what the city is going to allow us to build, and based on that, what it's going to cost us to build. together we form a partnership where your percentage and my percentage is what we agree on. Whatever your value is and whatever I put in as construction costs, that's what we do. That's what we do together.
Sure. So and then you did another about face and started looking into this crowdfunding. So that's where griffincrowdcapital.com comes into play. So how does this work, and how do people get involved?
So Griffin Crowd Capital, this is a bunch of little things coming together. You know, the crowdfunding with the finance or mortgage part, and then it's the investment in real estate. So when this crowdfunding thing happened for commercial property or for real estate, commercial real estate, a couple of players came up, like Realty Mogul. There's a couple other ones that came up, but most of these guys were tech people getting into the real estate business because they didn't know. If you look into their history, the people that started Realty Mogul, they didn't know anything about real estate. So they had to hire people that had the idea and things like that. We're coming from the actual business of finance and real estate onto Griffin Crowd Capital, you know, a crowdfunding platform. And we are offering people to invest as debt investment, where you're investing your money and receiving interest rate for your money. We do that where we only put them on a first trust deed position, which is the safest position you could be in a property, and rates and returns of 8 to 12% returns. Again, in a very secure property with no property over 70% loan to value. That's one thing we offer investors. The other thing we offer is equity, up to 75% of the equity of the projects that we're doing. We offer that up to them. So those are the two platforms that we offer to investors. Either one, it just depends on the client. What do they feel more comfortable with, or what do they want? Like, for example, the debt investment is a short-term play. It's 6 months, a year, no more than 24 months, and you get your money back, but you're getting monthly return on that investment. When you go into equity partnership, now you're looking at, if we're doing a development, you're looking more of 18 months with no return, but you can see the return that's coming up because of the project that we're building. And it's a huge return. When we go into apartment buildings, the return is immediate, but it's not the same as when you're doing a debt investment. Mm-hmm. So the investors invest in whatever they feel more comfortable with. They want and what return they're looking for.
Sure. Yeah.
Everything protected by real estate. Everything protected by real estate. Everything. The fund is a SEC registered fund. It's everything is through escrows. We don't touch any of the money. It goes straight to an escrow fund, and then from there it goes to the projects that we're doing or we agreed to invest in.
Is this open then just to accredited investors, or can anybody participate?
Yeah, right now we're just doing accredited investors. We're not doing the open market. We're just doing accredited investors. Maybe in the future, yes, but right now that's what we're doing.
Sure. So just to remind everybody, head over to griffincrowdcapital.com if you think this sounds like a good fit. But and there's quite a bit of information there, so check it out. And this has been a very insightful conversation, Victor, and I hope you'll consider coming back again sometime. But before I let you go, I know we're kind of you're between things here today. Is there a question you wished I would have asked you here today?
No, but I would like to say that, you know, for investments, there's people out there offering investments in other states, which are good. But I'll tell you, you know, you hear, oh, people are leaving California. I don't see where they're leaving. They're not saying how many people are coming into California, but there's definitely a huge, huge opportunity of investments here in California, as well as other places. But I'm just saying there's a huge investment here in California.
Well, it definitely sounds like you found the path forward there again. I mean, we were talking about how you don't even have a reverse. You just find your path forward. And it sounds like you've really figured this out, especially regarding the metro areas and how to take advantage of those local needs.
Yes. And my experience in finance is a big part in this here because, you know, eventually you're going to refinance, you're going to sell, you're going to finance these properties. and the exit strategy, and you need to know what you're doing at that point and how you can make these projects more attractive to the end user. So we have that going on that a lot of people don't have, so that's another big plus that we offer at Griffin Crowd Capital.
So, well, I really appreciate your time. I hope you'll consider coming back again sometime. I have a feeling we could just keep going.
Oh yeah, for sure. Definitely.